From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 18th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will look for entry and exit opportunities. Now, we're starting off the week with a fairly light news calendar, but that will pick up as the week goes on. And as always, be sure to use appropriate risk management strategies in all trade setups. Starting here on the USDCHF, the US dollar versus the Swiss franc. Overall, if I zoom out a little bit more, we can see that this currency pair clearly has been in a downtrend, but that downtrend has come to a slowdown at the very bottom right-hand corner of the trend. It's three times really hitting down into the mid 9400s and rebounding back higher again. Each time it's rebound higher, it's come very close to the 100 period simple moving average. You can see the green line coming down here in the chart. Last week we saw the market touch the green moving average, the 100 period moving average, and fall back down into the 95, 90, 9600 level, the pink shaded area here at the bottom of the chart. Let's go ahead and zoom it in one more time. So last week, prior to the spike high, we saw the market have a pretty good rally, moving all the way from down here in the mid 94s purple zone at the bottom of the chart, all the way back up into, or pretty close to, the 9700 level. Then that sudden fall off. The pink shaded area is what we want to focus our attention on here at the very beginning of the week. If we're going to see the continued fall off, it will likely need to stay underneath 95.90, underneath the pink shaded area. So if we can break underneath there, we may look for the continued fall off. That would also be the 382 of the run that we saw here from the low to the high. 382 sits at 95.96. So underneath that pink zone, underneath the 382, a continuation back down towards the green zone or lower would be our move that we're looking for. So it needs to break out underneath there. If it can't do that, then the next move might be another rally here for the above the pink zone, rally for the dollar franc, moving back to the blue zone or higher. Now, midweek, we have some significant FOMC news that could change everything we're seeing about the US dollar, but definitely the pink zone here at the very beginning of the week is what we want to focus our attention on. 4-hour time frame, again, doesn't change it much. It really gives us a really good view of that pink zone, how the market's in congestion right around the 95.90, 96.10 level. So we need the breakout either above or below to give us a real expectation of the next move for the dollar franc. Moving over to the EURUSD, the euro versus the US dollar. Clearly, of course, this currency pair has been in an uptrend. You can see that along the black trend line. We've been discussing the pattern within the trend. That's all the boxes you see, blue boxes along there and the black box at the very top of the chart. So with that trend pattern, it's obvious that if you're going to go long and buy the euro dollar, you want to do that as close as possible to the bottom of one of those boxes. You can see there, every time it's come down to the bottom of one of those boxes, it found support. So if we zoom it in here on the daily time frame, we can see the orange shaded area is the bottom of our current range or current box that we see here within the trend pattern. If you're looking to go long, makes the most sense to look for it down here closer towards the orange shaded area, not necessarily underneath the purple zone, because right now that purple zone holding as our resistance. And of course, the next reason to go long would be the breakout above the purple zone, looking to target back to the yellow zone or higher. So buyers, in the direction of the trend, you're looking at the orange zone or above the purple zone. Now, if you're looking for further evidence of reversal to go back down for the euro, again, the yellow zone or the purple zone may become that opportunity. Back under the orange zone would break basically the trend pattern that we've seen for the past several months, breaking the black trend line. Again, zoom it way out here and you can see that black trend line. If it gets underneath there, that changes the trend pattern, which it hasn't done yet, but definitely something to watch for. 4-hour time frame won't change that much. We could definitely see that the 1945 level holding as resistance right now, but a push above it, we look for it to go back up. Back down to the orange zone, of course, becomes a potential opportunity for support and to go back up. But right now, intraday, as long as it's underneath the purple zone, I don't think going long is a very good idea. Maybe even an intraday sell opportunity here for the euro dollar today. Moving on over to the GBPUSD, significant rally last week, significant move over the past 2 weeks, making a new multi-month high all the way up into 1.36. Let's go ahead and zoom it in on this. 1.3600 is the orange shaded area, and Of course, Friday found resistance. Today, finding resistance right underneath the 1.3600 level, the orange shaded area at the top of the chart. If you're going to buy something, it doesn't make sense to buy it at such a high level, such the top of the trend. It doesn't make sense to buy it. You really want it to pull back. You want it to come back down to a support. You want the currency to go on sale before you look to go long or buy the currency pair. So 236 of at least the run here from the lowest low that you see here to the resistance high. 236 fib sits at 1.3418. That's the bottom of our yellow shaded area. So at minimum, I would say you want it to come back down to there before you look for the long scenario here for the pound dollar. Does that mean you just instantly want to go short and sell it towards there? I don't think so. There's no reasonable expectation to go short right now on the pound dollar. Take it down to the 4-hour time frame. You can see that congestion. You can see the market challenging the orange shaded area since Friday. Again, if you're going to go short, at least that gives you your best opportunity for lower risk and higher reward as close as possible to 136. You just don't want it to break above there. If you're looking to go long, it needs to either pull back or break out above that orange shaded area and that significant resistance that we're seeing there for the pound dollar. I think it's a cautionary pair right now since we're such at an extreme high. Moving on over to the USDCAD, again, looking at extremes within the trend. This is a downtrend, of course, but we're at the bottom of the trend. And really, let's go ahead and zoom it in on this because I think this is significant for us. Take a look at the last 4 days. 1, 2, 3, 4, today included, and the previous 3 days. Kind of stuck inside this period of congestion, the black box on top of the support level 1.2160 down to 1.2105. That's the blue shaded area. So right now, as long as it's on top of there, it's a difficult place to go short. We don't want to go short sitting on top of that blue zone because it's found support there for 4 days now, or at least the previous 3 days have found support there. So don't go short on top of that. If you're looking to go short and sell the trend, it needs to break out under the blue zone, which it hasn't done yet, 1.2105, the bottom of the blue zone. So it needs to break underneath it or probably rally back to resistance. Again, buy low, sell high. If you're going to sell something, selling it at a resistance. 382 of the short range here sits right here at 1.2290. 618 of even a shorter range sits right there inside the yellow zone as well. And of course, the trend line sits way up here towards the orange shaded area. So selling either under the blue zone or back at the yellow or the orange shaded area. Buyers very interested at the blue zone 2160 because the last 3 days have found support there. So if you're looking for a long scenario, back down here towards the blue shaded area may be your very best lowest risk opportunity. Just be careful and watchful because if you're buying, if you're going long, you're trading against the overall trend for the dollar CAD. Moving on over to the US yen, significant rally here for this currency pair. Let's take a zoom out real quick. We've been talking about this wide range here for several days or several weeks in the trade room. The black trend line showing the fall, rise, the blue trend line, the most recent fall within the range, and now we're seeing the market push above that blue trend line. Last week it pushed above it. In fact, we took buys into the blue shaded area, into the 110.05 level last week, and the market pushed higher, eventually spiking down right here on this spike and taking us out at our locked-in stop losses. But the buy was the right opportunity here around 110.05. If you're still in that trade, you should be protecting profit as it pressures now into the mid-111s. Challenging now the 100 period simple moving average. So selling right now on this pair, not really an option. We should be looking for opportunities to buy. Dips to support, breaks of resistance, 4-hour time frame. If we get down here to the 4-hour, we get an opportunity to look for support. And I think the pink shaded area here becomes our opportunity for support today. The breakout scenario, 111.45, 50 or so above the orange zone. So above the orange zone, continues to rally into the upper 111s towards 112, which is the green shaded area. Staying under the orange zone, we possibly look for the pullback to the pink shaded area for our next opportunity to go long. Selling right now just doesn't make a logical sense for the dollar yen. Moving on over to the AUDUSD, the trend is still up. Let's not forget about that. Even though the past several days have shown some indication of reversal and possible pullback, we are still well within the confines of the uptrend. So I don't want to forget about this. If we forget about the uptrend, then we could make some mistakes. So if we're going to trade the trend, then I think we want to look for a dip to support or a break above resistance. Pink zone support, top right hand corner of the chart, bottom of that red box that you see. And of course, a break above resistance would be a break above the blue zone. So that's the trade in the direction of the long-term trend, would be buy the dip. Let's go ahead and move it in now. Buy the dip to the pink zone becomes an opportunity to trade at the trend line and in the direction of the trend. Or, of course, like I said, above the blue shaded area would be your opportunity to go in the direction of the trend. If you're looking to counter trend, then, of course, the blue zone is probably your very best opportunity today, or the push under the pink zone. So your trade opportunities are pretty clear where they lie. It's at the blue zone or the pink zone. It just depends on which direction you want to trade this currency pair. Trend would be the blue trend line, the pink shaded area, or above the blue zone. Counter trend, the blue zone under the pink zone, looks for a new move lower for the Australian dollar this week. And lastly, moving over to the NZD/USD, of course, we have to consider there's some parliament elections coming up into this week. Could produce some extreme volatility, and really that's what we saw most of last week. Let's just go ahead and zoom it in here. Inside the blue box, we saw rallies to the pink zone, we saw falls to the green zone. The difference between the pink and the green zone is about 120 pips from top to bottom of that blue box. We can already see today some significant pullback here for the currency pair as it fell off of the 73.30.40 level, fell off of there and back down here into the pink zone. So be cautious on this pair. With the elections coming up at the end of the week, we could see continued volatility, continued whipsawing back and forth until we get some results from those elections. But at least right now we know where our resistance is. That's the pink zone. We know where our support is. That's the green zone. A break above the pink zone may look for this to continue higher. Break back below the green zone could look for this to continue lower. And we have this midpoint here, the orange shaded area. If it gets above the orange zone, we challenge the pink zone. That's what it's done past couple of times. If it gets below the orange zone, a challenge back to the green zone is possible. So we know where the zones are with lower risk and higher reward. I would say the pink and the green zone are your opportunities to go short or long. And as long as it's inside the orange zone, is a 50-50 shot. It's a flip of the coin here because it could go up or down here from this area. So definitely want to be cautious as we approach the end of the week. But these would give you some opportunities if you're looking to trade the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.